Hey everyone, we're going to do some financial statement analysis here for Symbotic stock. We're going to look at its balance sheet, the cash balance. We're going to look at the income statement, the losses on the bottom line, and one thing that seems a bit alarming for Symbotic stock investors. And then finally, we'll look at the cash flow statement, the big change that I saw in the cash flow statement and the causes for that big change. And then finally, I'll update my buy recommendation on Symbotic stock. Coming into the quarter, I did not have the stock rated as a buy, and I'm going to update that recommendation following this financial statement analysis. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the company's got a strong cash position, 901.3 million in cash as of March 30th with 49 million in marketable securities. The company has basically zero long-term debt, although this cash is not Symbotic's to do what it pleases with. This cash it needs to use to deliver service, because let me share with you, the company has 812 million in deferred revenue. So it has collected cash from customers, and that cash is in Symbotic's balance sheet, and now the company has this obligation to serve customers that have already seemingly paid up front for services, and then when it performs this service, that will go on to the income statement as revenue, and then it'll have a cost of goods sold associated with it. And the company is gross profit margin positive, so it is likely to generate a gross margin on those services it delivers. So this is likely going to turn into revenue and profitability for Symbotic. Not profitability on the bottom line, but at least gross margin positive for the upcoming few quarters. Now, Symbotic is trading at a forward price to sales of 1.7. That's up from lows of October of 2023 when it was trading at a forward price to sales around 1.2. The stock price itself is down in recent days following this earnings release. It's now trading at $41.79. So I highlighted gross profit, and let's take a closer look at its revenue minus expense line items here. It generated 424 million in revenue. That was a solid increase from 266 million in the same quarter the prior year. A little disappointing was that its gross profit barely nudged higher in the latest quarter, up to 44.1 million, up from 42.8 million in the same quarter the prior year. In the first 6 months of the year, the gross margin has improved more nicely than the most recent 3 months. In the first 6 months of the year, gross margin has increased to 114.2 million, up from 78 million in the 6-month period ending in March 25, 2023. The company has controlled operating expenses. Research and development and SG&A has decreased year over year. I love to see when companies decrease this SG&A expense, selling general and administrative expenses. A lot of waste in general and administrative expenses. These are things like salaries for the officers, rent for corporate headquarters, furniture for headquarters, things of that nature, where I would like management to minimize these costs as much as possible. Research and development, I'm mixed on. If you're a company that's demonstrated you can innovate, and so you spend research and development expenses wisely, and those investments lead to products that generate profit, I'm okay with you continuing to spend. But if you're the type of company that's wasteful and hasn't been delivering any innovation while spending a great deal of money on R&D, then I would like you to pull back. So it's too early to tell which type Symbotic is going to be. No doubt about its robotics technology is innovative and one of the most cutting-edge technologies in the markets today. So I think I would lean in favor of the company spending in research and development. Now, its operating loss shrunk, which is good news, from 57.7 million down to 50.9 million. The improvement is much larger for the first 6 months, where the loss shrunk from 127 million down to 70 million. I've said this repeatedly. I don't mind companies losing money on the bottom line if they're growth companies, especially if they're demonstrating progress towards profitability. Symbotic is definitely doing that. I highlighted an area of concern for Symbotic stock investors, and that is shareholder dilution. The company went from having 60.5 million shares outstanding up to 93 million shares outstanding in 1 year. So significant, more than 50% shareholder dilution for Symbotic stock. The reason why this is important is if or when the company becomes profitable, it needs to split those profits among more shares, thereby decreasing the earnings per share. I also highlighted that I did not have Symbotic stock rated as a buy coming into the quarter. I had it rated as a hold or an expectation that it would perform along the lines of the market. I'll update this at the end of this video. I'll let you know if it's still a hold or if I'm upgrading or downgrading the stock. Finally, I wanted to look at cash flow from operations, which worsened. It generated 132 million in cash flow from operations in the 6 months that ended March 25th, and that turned negative 9.1 million in the 6 months that ended March 30th. And the primary culprit is deferred revenue. In this same 6-month period last year, the company got 263 million in cash from customers for services that they're going to render at some point in the future. So it got paid up front. This time period, in the first 6 months, it only got 69 million upfront payments. So that decreased by 200 million the upfront payment. That's not ideal, but the fact that Symbotic is getting paid upfront is interesting and good to begin with. So I'm not going to get too picky on that metric. The other metric that worsened was prepaid expense. Last year, it had 25 million positive in this metric, meaning that it was not paying cash upfront for its own expenses. So it was generating expense. It was working down that balance. And then this year that turned negative. So it paid upfront for things just like it got paid upfront from its buyers. So it paid it forward here, and its outpayments exceeded its in payments. And so that led to a cash decrease from operations and a significant worsening from the same period last year. I highlighted that the company diluted shareholders significantly, but at least it got cash in return and it strengthened its cash balance. It got 257.9 million from selling its shares, and it received 158.7 million from the exercise of warrants where buyers picked up their option to buy their stock, and so they paid the company cash and received stock. And the opposite for the proceeds from issuance, actually the same for the proceeds of issuance. Investors paid the company cash and they received shares of Symbotic stock. That's shareholder dilutive, but at least the company gets cash in return. So to update my recommendation for Symbotic stock, I'm keeping the stock rated as a hold. I'm not yet upgrading the stock, even though it has excellent prospects. The robotics technology is in high demand right now, especially as labor costs are rising. Businesses are looking to Symbotic to reduce its costs and improve operations, right? These robotics are up more than people are, right? Of course, they need some downtime for maintenance, but they can work more hours in a day than people can. They don't call in sick. They don't take vacations. And their wages, they're not going to continuously come back and ask for higher wages. And so I think many businesses are looking to Symbotic, and that's going to increase going forward. This is a long, long tailwind for Symbotic long term. It's going to continue growing. That's almost inevitable. But can it do so profitably? And can it do so sustainably in terms of cash flow from operations? Those are my two big concerns right now that I don't yet have answered. And so I'll wait until I see that, and then I'll upgrade the stock if it happens. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.